Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Tuesday, the 8th of November, and we have Charu Chanana, market strategist from Saxo Markets Singapore. Now, Charu, good afternoon and great to have you on the show again.
Good afternoon, Brian. It's my pleasure, totally.
Now, Charu, before we get back to you and your insights on markets, let's take a look and see how the numbers shape up for the first half of the day. So we've got Bitcoin, which is at 19,645. It's down 5.96%. Ethereum is at 1,463. It's down 7.76%. Now, looking at regional equity markets, we start with the Straits Times Index, where you are at in Singapore. It's down 0.2%. Bursa Malaysia, KLCI, is down 0.38%. Shanghai is down 0.62%. The ASX All Ordinaries is up 0.25%. The Nikkei is up 1.33%. The Hang Seng is up, the Hang Seng is down 0.30%. And rounding up the numbers, we've got the Kospi, which is up 0.92%. Now, Charu, what's your view on how markets have performed in the first half of the day?
So pretty mixed performance there, Brian. I think, we do have some of that rebound taking shape after the big drag that we saw in the equity markets last week from that hawkish FOMC conference. But at the same time, there's speculation on China reopening. And, so there's been a lot of news in the markets, but and it is like two-way news. There's no particular direction. And I think that's really being reflected in the markets today.
Now, Charu, I think the big news across the world really is people are anxiously looking and trying to figure out how the midterm elections in the US are going to shape out. What are investors looking for or worried about?
So I think, of course, the expectation, that the markets are really relying on right now, coming out of the opinion polls. We are getting hints that we probably might see a divided Congress, but that usually is a positive sign for the markets. Of course, there's a lot of apprehension right now, but later on today, and when we start getting the results, over the week, over the next few weeks, I think from these midterms, there is some sense that Republicans could take over the House. And also potentially the Senate. Senate looks like a closer call right now, but potentially they could. And that division in politics obviously creates a lot of confusion about fiscal policy. When fiscal support will not be possible for the economy, then investors, I think, will be very fast to again start expecting a Fed pivot because of recession concerns and such. And that can lead to equities rallying, a tactical rebound in equities and be a little bit dollar negative as well at this stage.
Now then, I want to shift a little bit to closer to home. On our side, what are expectations on the direction of the dollar given the uncertainty and how that's obviously going to impact our currencies in the region?
Yeah. So, of course, this volatility because of the midterm elections, and we have the US CPI due as well this week. We do think that there is some caution there, in the markets right now, especially in terms of the dollar, because it has reached some extreme new highs this year. But, that being said, I think how I'm looking at it really, from a very thematic standpoint, it does appear that the Fed is certainly remaining hawkish at this stage. But if you look at the other major central banks, the ECB, the Bank of England, the RBA, the Bank of Canada, they've all actually taken a little bit of a less hawkish turn. In fact, dovish turns over the last few weeks. So that divergence in policy does create room for further upside in the US dollar. And also, if you think, that recession concerns could start to feed a lot more into market expectations going forward, I think even that kind of drives safe haven flows into the US dollar and the US assets particularly. So overall, I do think that, tactically, there may be some pushback on the dollar in the next few weeks, but I think there is still a lot more potential for the dollar to run higher. And that certainly is the biggest pain point for the currencies in our region, in Asia particularly. And a lot of the central banks have to continue to use their reserves to kind of defend the value of their currencies, hike rates as well. So we are going to see that pressure build in this quarter into the first quarter of the next year as well.
Now, Charu, over the past week or so, we've had a rally in China on the back of reopening expectations of the Chinese economy. What's your take on this, and does this have legs?
Yeah, I think right now, again, as we started the conversation, there are two sides to the argument. The officials they're neither accepting it nor denying the thing completely, that they're going to take away measures. I think at Saxo here, we do believe that China is likely going to stick to a dynamic zero COVID policy still. It's not like overnight they're going to come up and say, okay, hello, we are abandoning zero COVID. So there will be some amount of restrictions, but we do see them adding a lot more flexibility, being looking at quarantine requirements or PCR testing. I think consumption is becoming a big focus. We had China export numbers out yesterday, a little bit of a red there for the first time in over 2 years. So of course the export leg of growth is weakening, so they need to support consumption a little bit more at this stage, and that is why we do think there will be a lot more flexibility in their zero COVID policy. But like I said, it's not going to go away anytime soon, I think.
Now, Charu, thank you very much for your insights, and thanks for coming on the show.
It was a pleasure. Thanks, Brian. Have a good day.
Now, I'm Brian Fernandez, and we've been speaking to Charu Chanana, the market strategist from Saxo Markets Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.